Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's March the 12th. This is going to be our chart lesson for today. And we started out with a little bit of a downtrend, and then we reversed, and we had an uptrend. We got a break here and two really strong legs up to a new high, and then we just kind of been hung in a trading range ever since. And a lot of times, a trend line. I say this a lot, but people don't always hear it. But a trend line break and two legs up to a new high does not always mean you'll get a reversal. It just means you're going to get a correction that's going to last about an hour or longer. And sometimes that's simply a trading range. And we could break out of this trading range and go lower, or we could start another trend to the upside. I mean, we're late in the day. It's like 1:30 now. So, uh, but I get a lot of emails lately, and somebody, people send me an email, and I'm not talking to one specific person because I've got like four like this today. Somebody sends me their chart and they say, Mac, what happened right here? This was a sure thing, and just no way it could fail, and it's right off my trend line, or perfect second entry, and then you look at their chart and their trend lines are nowhere even close. Generally, your best bet on your trend lines are going to be off the first couple of swings. And you can see this one's off the first couple of swings. I also looked, it looked a little bit like a spike and maybe a channel working up through here. But after I looked at it a little more and got a little more price action, it's pretty obvious that it's just off those first two swings. And there is a median line in here. And I get that from people, and they'll send me their median line, and they'll say it has a perfect median line. Look, just try to find the trend line and the channel line and skip these median lines until you get more practice. I mean, that's why I'm hesitant a lot of times to show you some of this stuff, because people start getting carried away, and man, there's lines all over their chart and you can't tell heads from tails, and it just kind of gets crazy, so to speak. So you got to get, you got to at least be able to tell which way the market's trending. And right here we're making lower highs and lower lows until right here we make our first higher high, and then we go down from there. And this is supposed to be red right here, or actually I wanted to make that one green. Uh, we make two legs down to a new low, and it switches. But there's two ways you could have looked at this. At the very least, if you drew it off the first couple of swings, you still got to the same place as what I think the channel. I really think this is the channel right here. And a lot of times in the overnight, you'll see this. You'll see some, something outside the channel that doesn't have anything to do with it, because they can move the market so much easier. So I've showed that a couple of times lately. But even if you just, this is where the day started. So if you just started right off those first two things, you can see that's what the trend line was. I mean, that's very obvious. That's the trend line. And somebody sent me their chart and actually was using that as a median line, and they moved the other line up here, and they got tripped up right here. But you can see, even if I move that line up here, this still shoots through there, and it doesn't, and you need confirmation. You really got one swing, a second swing, and then the third, where you get your confirmation, it actually goes through it and then comes back. So, and that's a very bearish looking bar, but that's what they do to you to fool you. And, the price action, let me say this, the price action is never wrong. Used to I'd see trades and I'd think, some trades just fail, and we got fooled there. But that was before I learned more, or I guess I should say I got better at the price action. As I've gotten better at this, and the more I watch it, I honestly don't think the price action is ever wrong. We just read it wrong, and you're going to get fooled sometimes. But you got to get these lines right, or at the very least, if you can't get them right, you got to realize right here the market is making higher highs and higher lows until um, really, really till right here. I mean, we make a little lower low than this right here, but we still go higher, and we keep making higher highs, and this really was kind of a trading range. We kind of went into a little bit of a trading range, but the trend is up, and there's no break of that trend line anywhere. And if you use the, you know, if you get rid of these, assume you use this one, this channel, and that may be light. Let me just darken them for a minute so we can see them. Um, you know, at the very least, you could have used this one. And, you know, it comes off the first two swings, and you can see it holding prices. You get a break, and you get two legs up, and then you get your two legs down to a new low, and then it reverses. So that gets you to where you need to be. But in the end, and that's what I traded off of, but in the end, I believe this was it. The reason I kept playing with it was it didn't fit right. So I said, hey, let me just draw this off the lows and make it fit up here, and then suddenly it's clear and I can see it right clear as a bell that this is the channel, and we just had that overnight shoot that kind of goes above it, but this is the channel right here, or you could look at it like a spike in a channel, either way, uh, which is common. So you gotta make sure, and this is what you call holding prices. Look how every time that line came, and there's multiple, you see it happen over and over. It doesn't just happen once or twice. So, you know, if you see it happen twice, that's just like right here. It really touched twice here. This didn't touch, and then it touched here, but it couldn't go anywhere, and then it breaks. So I wasn't completely sure about that line. So I was looking to see if maybe we had a little channel of some other type here, and what I was looking at really was coming off of these highs right across here, and you can see there's something to that right there. But when we overshot it right there, I went back to my original channel that I've got on here now, and you can see that there's probably some kind of you can see that there's some kind of channel, like a spike right there in a channel, but we went way above it here. So, you know, even though these lines look close, I got to go with what I see that fits the best, and that's this right here. And that gives you your break, your two swings to a new high. You don't have to get it exactly right. Let me say that. But you have to be close enough. You saw that I could have drawn this one a couple of different ways. But most of the time, it's going to be off your first two swings. And, you know, if you're unsure, stick with that. But, you know, I'll see people come in here, and they just avoid all this, and they draw. And I saw somebody's chart come in, and they just drew it right off there onto those two. And they just avoid all those swings up through there. Well, there's something holding prices up through there, or they wouldn't be turning. And so they just avoid all that, and they go from this swing to this swing, and you see it just, there's not enough touches, there's not enough turns of the line. You can't, well, you might make that fit a little bit up here on the top. It doesn't really fit nicely up top. There's a rhyme and reason why prices turn at these places, and you know, there's a reason that prices turned before it got to the EMA there. There's a reason here. The EMA is really what turned this. This is like a little double bottom and just a failed break lower. So, you know, start by always trying to use those first two swings, and sometimes it's, you know, it's using both the closes. Sometimes it's not, but just play with it until you get it to fit right. But generally it's the first couple of swings, and sometimes it's like the first couple of swings right here. That's what gave me that line. And then we had the break and a couple of legs down, and then, you know, then we kind of been correcting, and I had a little trend line. I was drawing these trend lines back and forth. But this is just a trading range right in here. And this kind of looked like a spike in a channel here too. You can see that that was holding prices pretty good right there. Then we got the break, a move down. We didn't quite get a new low, and we've kind of been working. We've been working up since. We're making higher lows here each time. We hadn't really made higher highs all the way up, but we're making higher lows. So, but at the very least, recognize if the market's trending or not, and if so, which way. And this market's clearly trending down here. But then you get to right here, and it's not clearly trending down anymore. You know, prices shot right through that EMA. They came off of it and didn't go lower. There's a little double bottom trap there, and then they went up and went right through. They come back, they test it. So you don't want to be going short right into that late in a trend. that's telling you something. That's what a little reversal pattern looks like. The better ones are when you just shoot right through and make a big high that's higher than the last. But look how that swings higher than that one. It's higher than that one. Uh, that's telling you something. There's two legs up there, and there is a nice bearish bar there, but this was really your signal bar, and that's a horrible signal bar. So by entering below that bar, you're entering late. Seems like the chart the guy sent me, though, he had a nice signal bar right there. And, you know, anytime you go, if the trend's down and you go short above the EMA, it's a little bit risque. And it's the same thing when the trend's up. Anytime you go long below the EMA, it's a little bit, you got to really make sure you know what you're looking at before you do that. And just like right here, you know, you had to wait for the little trap, and you already knew there's support right there. We had a failed break lower, and then we come back and we tried it twice more. And so there's a different reason for going long there. And somebody actually asked me about the EMA right here. And in this case, because of the trap and all, and the fact that there's two measured legs up and it's the first break of the channel, there's enough reasons to go long there. And long, you could go long off that first one, but look at my signal bar. It's horrible looking. That's the signal bar right there. And it's you don't want to go long above a bar like that. So just wait, and then you get the little trap. And this one didn't close right on its high, so even then it was a little bit questionable, but the fact that we had the new low, the failed break below the double bottom, and then two more tests of it, and, you know, people recognized it and look at it go. And then you're looking for a measured, you can see I had that right there. You're looking for a measured leg. There's the first leg, and there's the second. It looks like we missed it by a tick. But that was kind of the target you would shoot for going up there. But let's talk about the trades. Hopefully that makes sense to you. Let's talk about the trades. But yeah, you know, you can, you know, again, when you have a losing trade, there's generally a reason that you lost. The price action's never wrong, really. And if you have a losing trade, you just misread something. You missed something. And I don't mind telling you what you missed. But what I'd prefer you to do is study your chart at the end of the day and see if you can figure out on your own. And then if you can't figure it out, send me your chart and let me look at it and see if I can help you out. Because the way you get better is figuring this stuff out on your own. And sometimes some of you, you know, I've probably already done this with you, but you'll send me something and you'll ask me a question. And rather than me just answering it, I'll send it back as a question back to you. And, you know, and the reason I do that is because I think it makes you think and it helps you to learn, and you get better instead of me just giving you the answer. So I'm just trying to, you know, I'm just trying to make you think a little bit, I guess is what I'm trying to say. So don't think that I don't want to answer your question, because I'll always answer your question if you can't figure it out. But I want to see if you can figure it out on your own first. So let's see, what else here? Let's just go back to the first trade I saw here. If you were here when this one set up, you know, when this broke lower, you might have considered a limit order. And if you dropped it in there, you see you would have got filled way on back here, all the way almost back to that top, back to the trend line, really. I think it probably would have been better to wait on a second entry, which comes right here, and it's right off that line again. So easy scalp right there. And again, you might have used a limit order, maybe a tick back in, but a stop still worked. And then notice how this one didn't go much further, and then this one only went a tick and bounced. And so you could go short here because that's a second entry, but then you get a little failed second entry long right there. Surely you don't want to get trapped long right here, and obviously not many people did, because it looks like it sets up a great second entry short counting off that new low. And if you went short right there, you got burned too. But your clues were, notice how this one didn't go much further than that one. This one just went a tick. And then to get in right here, you don't have room to scalp out before reaching that bottom. And you got to always be aware of that and where you're entering. And if you got trapped here, you just about have to exit. I mean, if you went short right there, you got to exit, because you never know, this thing might rocket on out of here. And you don't want to get caught at the bottom of a trading range or at a reversal like this, because look what happened. You're still trading up here near the highs of the day, and you're stuck. So, you know, just if you get burned here, you got to exit. So, but there is a little failed second entry long right there that turns down, and that's a nice bearish bar too. Um, but you got to realize how close we are, and I'll talk about that over here on another trade I took, and it really scared me. And I actually demonstrate. This is one that I took after my trades, and I'll show it to you. But I basically almost made that same mistake myself. It still worked out, but you know, if you entered right there, the clue was when this didn't go down any further, and this one ended as a doji, just take your tick or two or break even and get out of that thing. Definitely no more than breaking higher there, because that's going to shoot up, because a lot of people probably got trapped right there, I guarantee it, because it's so tempting to take. But you keep in mind that it's not a real strong trend, um, you know, and it don't take off like it's supposed to. When you get a failed second entry long and a nice bearish bar like that, and it doesn't take off, something's wrong. There's just something's wrong, and that's your first clue. And the only thing that might have kept you in, I think that's probably your first leg down. And we were kind of looking for a measured leg. We didn't quite get that. Might have just been to right here. And if you measure that from here, you can see we pretty much got that. So generally you get a couple of swings in the middle before you get your next leg down. So generally I would have probably measured from, or I was measuring from here, and I was looking for it to come on down here. So this one was a little bit risky here. That's your first break of the trend channel, in my opinion, during regular hours. It's right after the open, and they like to run it one way at the open and then reverse it. So, really aggressive traders probably going to think about going short there. Might have used a limit order. Generally, I would say you can't wait till the next bar to enter, but look how bearish that one is. And it's not bouncing off the EMA at all, really. And you're going to get a move. You're going to get an attempt to come back down here and at least test these lows. And there's also a little double top. It's a failed break higher. There's some different reasons to enter that right there. Again, without waiting on that. And it is a second entry, actually. On a bigger picture, look at that new low, then you got first entry, pull back. So you could count that as a second entry, but I want to wait for a second entry off a high when you start coming out like that, and we never got one. You didn't get that till down here, and now you've got a new low, and this is not a very bearish bar because it didn't close on its low, and then the next one closes inside, but it did close on the very low, so you can almost put those two bars together, and then you got to you can do that sometimes. You can put them together and kind of see how they offset each other or whatever. But this is just kind of like an up-down bar. But the trend is down, and, that's a really bearish leg. And you're looking for a measured leg that was on down here. So, somebody aggressive might go short right there. It would have worked. But now you got two legs down, and notice how this didn't go as far. Then you bounce up out of there, and then you get above the trend line. You probably didn't want to go, you definitely didn't want to go short right here. You probably didn't want to go long, though, until you got the failed second entry short. Notice that new low, first entry, pull back, second entry. So they trapped some people there, and so you might think about going long above that one if you want to be aggressive. And notice how that shot up real fast, so they trap people. Then it pulls back, and it gives you a chance to enter here, and your stop would go right below that signal bar. And, you definitely don't want to be going short there after that break and the two new lows. But this is where the other trader got tripped up, but he's not reading the price action right. And, generally the first move above the EMA is just your first clue that something's coming. And it's generally not enough to reverse the market if it's trending. And that's kind of the same thing here. That's the first real move. You broke through it right here, but that didn't it rejected it immediately. This was really the first time prices got through the EMA and closed clearly on the other side. And that was exactly what I told the other trader that asked me about this setup, is that, he was wanting to know, is it okay to go long? Well, it's definitely makes it, is a signal, hey, I got to think about this real strongly. Should I take this? But there was a trap here, so that made that one better. Uh, but if you got tripped up here, you just have to exit when that turns up, because um, you got two legs up, and so on a bigger picture, that's a failed second entry short. And if you didn't enter there, I think it was too risky to enter here, because now they're kind of stacking up. You got a little bit of congestion. There's always a chance it comes back down and tests the trend line or tests this trend line. So if you entered here, I think you were fine, and I think you wanted to enter there. Um, and looking back at it, I wish you might even want to enter here and add on, but I think it's just too risky. You don't know that it's going to do this until after the fact. But once it broke higher, you know, there's a good chance we're going to at least come up here and test this last high. And you can see that's where we started finding resistance. And then we went up to the next one, and then the next one. And that's what it does. It just keeps testing until it fails, and then it goes down and starts testing the other way. And we finally found resistance again right here at this strong point, and we went up again. So that's kind of what happens. But this one we already talked about. You got a new high, pullback first entry, pullback second entry, and the second entry is exact the same as the first. No way you want to go long there on a first entry. There's no setup. You might have thought about off this bar, but it never broke higher, so then it drops. But that thing reverses instantly. The only thing that made me hesitate a little bit was we weren't back to the trend line, but the trend line may be more like that right there. And you can see that kind of catches that bar right there, and that kind of catches right off those closes. So it could be that, I just had it off a little bit, and that happens a lot. It's hard to know exactly where it's at until you get more proof. But there's a trap here. There's one, two, three. It's really a triple bottom, but it's definitely a nice double bottom with some space in between, and it breaks lower. And what usually happens, it fails and turns and goes up, and there's plenty of room to get out before you get to the high. You don't have to worry about getting stuck inside of here, because look, it did. It got stuck inside there. So if you were too close to the high, you might have got scared out of that trade, or you might have got stopped out of that trade. But there's enough room to scalp out, and it's easy scalp. And then you get two legs back. I think this one's a little bit, it was starting to look like it was a double top. It's starting to look a little bit like a trading range, and there's some congestion here, but look at this. First entry short, pullback. That's a nice bearish bar. Second entry short, and you can't be going short here. So odds are people are going to get trapped to the short side, and that's what happened. So aggressive traders going to take that two-legged pullback to the EMA and that second entry long, and it was a nice, easy scalp. I did make that one green though, because it's a little tricky. But if you get it and you saw it, that's a great trade. And then you come back here. You can't really take this one because this is a double top. It's failed so far. It's a first entry. It's just a little it does look kind of bullish, but it's an inside bar. It couldn't even get back to the high of that bar. So even though it closed on its high, that's telling you something. If it had broke past it, then maybe you might have thought about a first entry. You only want to take first entries on really strong trends. People ask me that all the time. Sometimes I see you take first entries, but usually you say don't take them, I'll wait on a second entry. Well, if it's a really strong trend, you may not get second entry, so you got to go with what it gives you. But this is not a strong trend, and hopefully you can see that because it's kind of stuck in a trading range. And we came back down and we tested that area once more, and then we didn't get a real good setup. We tested it again, and then they trapped everybody when it broke. They trapped a lot of people short here, and there was probably people getting short all along here and hanging on, and then when it went higher, they had to exit. And when you see a leg that strong, just kind of like one that strong there, you're going to get another attempt to the other way, and then you get a failed second entry short here on a nice bearish bar again. There's people trying to pick tops. There's even people that might understand the break of the trend channel and the new high. And so you get some people picking on, picking tops off that even know better, and they get trapped. I mean, that's tempting. And guess what? You get the second leg up, and it comes within a tick of being a measured move like that one, and then you get the sell-off. But again, I don't think you can go short until you get a confirmed trend line, which, you got one touch of it there. That kind of confirmed it. But I just didn't like going short right there, right at the EMA. I don't like that. It would have worked. Maybe I should have made it green. There's no real trap there or anything. That might be a little bit of a trap, but it's not a good strong one. But then you get the failed second entry long, and so then I really like that trap. And that one didn't hardly fool anybody. It turns back up, but as long as your stop is where it's supposed to be and you leave it alone, it comes on down. And if you weren't already in, you want to add on right here because now you got a failed second entry long. Again, I went back and forth whether to make this one green but look how bearish that is. And it actually closed right there and opened a tick, and it had to tick back, so I think I used a limit order right there, and it dropped back. And this is the trade I demonstrated. I was done with mine now, so I tried to get in 2 trades. I only got one. I got distracted and missed a couple here, and so I never got a second trade in today, but I'll show you this one in a minute. And then it comes down here, and it bounces here, and there's a little trap right there again. So at that point, I thought what we're probably doing is we're going to test this high again, and we'll probably make another shot up. And then you get a failed second entry short. So, again, I went back and forth over making that one green, but you just can't hardly avoid those traps when this is looking like it's going down. And it worked out real quickly. And then it comes back and you get another bounce off that. Now you got a double bottom there, but you do have a little break of this channel if that channel's right. You don't get a whole, you can see it was holding pretty good, but you don't get a lot of, and when it came back, it tried to hold again. But I think on the bigger picture, this support was fairly strong, and I think there's a bigger channel here, or bigger range here. And you can see we're playing off that high of this range now. And so we're still in this correction mode. So, and that was the last trade I marked. And again, both of these are a little bit aggressive. I didn't think this one was because of the trap. I wish I'd have been here to take both of those, and I would have demonstrated 3 trades. But the phone started ringing around here. I had other stuff, and I couldn't get but 1 trade in, and I decided to go ahead and do the lesson and leave it at that. But let's put this trade on here. Okay, sorry, I had a little interruption. Where were we? Oh, we're going to put the trade on here. Let's put the trade on here, and I'll just walk you through it again. Again, notice the new low, first entry short, pull back. It's a second entry short, but notice too that it tried to go higher twice. It made this nice little double top, and that's a very bearish bar. It is an inside bar to that, and there is some congestion there, but this is a fairly bearish leg down, so they're going to try to make another one down. So I like that trade, and I guess I just put a stop right there, and it broke lower, and you see I exited right there with my 4 ticks. And notice how it stalled here. You knew there was support here because it couldn't. Notice how many times they had to push down here till they finally pushed it 1 tick lower. And I didn't think, and I almost scratched this one, I really did. But when it couldn't make that tick higher right there, I felt pretty confident they were going to run it down here to this line, to this original resistance line, and test it and get that scalp out of it, and it did. But I came really close to just taking 2 or 3 ticks on that one and scratching it. And then I got distracted, had to take care of some other stuff, and we were all the way over in here before and I don't want to wait around anymore. I'm going to finish this up. It's 2 o'clock, and not as nice here today. It's a little chilly again today and cloudy, but I didn't want to sit here all day trying to get that second trade. So, but there's one today, and $100 for the day, and it was the better trades came with this little trap right there, and playing this range, and there really was a second entry short right there you could have taken. First entry looks like it probably would have worked. That's a big bearish bar. But you have to recognize what's going on to take these trades. You can't, you know, just because you see a bearish bar right there doesn't mean you go short, because now you're swinging higher, and you know, you've had your reasons to exit this trade. You've got your break of this channel here, and it's obvious that's a channel. Look, it's really the first two swings of the overnight right there, and you can see that. There's where the overnight, first bar of the overnight, and there's the first swing. So that's the first two swings, and look, it held all the way down. It got its break right here, and even here it was still finding resistance. And then this was the first two swings on this one, and you see so far that worked perfect. So generally it's the first two swings. Some people were using these as the, you know, but I think even I used that originally. So but even if you use that, it still gets you to the same place. There's no denying it still gets you to the same identical place. You know, you get your break. Sometimes you might see your move to a new low from that, but you know, a lot of times you'll get that first push through the EMA or whatever, and then off you go. But the reason I just wasn't comfortable with that one in the end is because I couldn't make it fit. It does kind of fit there. It looks like maybe there was a little bit of an overshoot, and that's the way I played it, so I wasn't surprised. I really thought we'd get the overshoot here or here, but it ends up coming here, and it's not really, it's a much bigger overshoot. Actually, you do get the little one here that's similar, but this is so much bigger that then it's obvious that this is it. And then if you look real closely, your first two swings are right here, and this is just some of that overnight stuff that happens sometimes, and you'll see that a bunch of times. But then you can see the way I originally got to this was I just said, hey, it doesn't fit on the bottom. There's your bottom line, and you move it up, and you can see that's it. And you could have just called it a spiking channel by starting it right there, but really I think what it is it starts right there, and that overnight stuff was just it's a break of this channel, but it's in the overnight, and that's, you know, that a lot of times won't break the trend. So anyway, good day. I'm 32 minutes into this, so we've talked about a lot of stuff. I'm going to wrap it up for the day, and we'll be back to do it tomorrow. Hope you had a good trading day, and if you're getting fooled, study that chart closely, figure it out. Hopefully I answered some of your questions here, and I will ask you that again, just remind you, you know, instead of just asking me immediately what you did wrong, wait till the end of the day, try to study your chart, see if you can figure it out, and if you can't, I'll probably answer it in the video, and then if that doesn't make sense, send me an email, and I'll be glad to answer it for you. So, but anyway, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.